For the past few years, if you look at the price of gold, it has been continuously rising. In fact, a year ago, the price of gold was around 60,000 per 10 grams, but it was recently crossed 75,000 rupees. It was increasing at a very fast pace. In fact, in many cases, if you compare, gold has been giving better returns than the stock market and the equity market. But after the announcement of 2024 Union Budget by our Finance Minister Nirmala Sitharaman,
Honorable Speaker, I present the interim budget for 24-25.
it brought a significant change in the precious metal market as we saw a substantial reduction was brought in the custom duty on gold and silver, which led to an immediate and significant drop in their prices. Hi, I'm your host Riya, and in today's video we will discuss in detail exactly what happened because of which there has been a change in the custom duty, how much tax is levied on gold and silver, how much GST is levied on both the metals, what will be the impact on consumers, companies and the rupee, what effect will it have on the dollar to rupee exchange rate, what about the current account deficit and overall trend in gold and silver prices over the past years. But before we move forward, make sure you have subscribed to our channel Freedom Money English and download the Freedom app. Well, Freedom app provides with multiple courses in 5 different languages where you can connect with the industry experts and mentors directly and can start with your learning journey. I will leave the link in my bio, so don't wait or hesitate. First learn and then invest. Now let's move on to our video. Let's first see what exactly happened. You can say that the consumers are happy because Finance Minister Nirmala Sitharaman has reduced the custom duty on gold and silver. Well, many changes were brought in the custom duty on various items like medicine for 3 types of cancer, the mobile industry, support for energy transition and requirement of critical minerals in strategic sectors. But we are talking about the dip in custom duty on gold and silver that has been reduced from 15% to 6%. This includes reduction in the basic custom duty from 10% to 5% and agricultural infrastructure development cess from 5% to 1%. This significant cut aimed to make gold and silver more affordable for consumer and boost the demand in the market. Well, if you don't understand what is this basic custom duty and agricultural infrastructure development cess, let me explain what does this mean. Suppose gold worth rupees 1 lakh is being imported. Earlier, the government levied a custom duty of 15% on it. Now, this has been reduced to 6%. If you were importing gold worth rupees 1 lakh, you had to pay 15,000 as custom duty. But now it has been reduced to only 6,000 rupees. The basic custom duty on gold and silver will now be 5%, which was earlier at 10%. Along with this, the government also levies a cess called the Agricultural Infrastructure and Development Cess, or in short AIDC. This cess means that the tax collection from it goes to the central government and not to the state government. The collected cess can only be spent on agricultural infrastructure and development. Earlier, the cess on gold and silver was 5%, which has now been reduced to 1%. So, the total tax has been reduced from 15% to 6%. Now, let's understand what will be the impact of this. It is being said that the price of gold and silver will fall significantly, and as you all can already see, this has happened. Gold was trading around at 74,000 rupees to 75,000 rupees. But after this announcement by Finance Minister, it dropped by almost 4,000 rupees and is now around 68,000 to 69,000 rupees. I am talking here about the MCX, which is multi-commodity exchange, where gold and silver metals are traded, similar to how the equity market has the National Stock Exchange or Bombay Stock Exchange. So the gold prices on the multi-commodity exchange MCX fell from 72,000 rupees to 68,500 rupees per 10 grams, making a drop of 4,000 rupees. Similarly, silver prices on the MCX decreased from 88,900 rupees to 84,200 rupees per kilogram. This decline was driven by the lower import cost, which translated into reduced prices for consumers. Well, the reduction in price led to a surge in demand for gold and silver. Consumers, taking advantage of the lower rates, flocked to jewelry stores, resulting in a 20% increase in the demand for gold. Well, in India, gold and silver have a very strong emotional value, especially during the wedding season and festivities. People, especially women in India, are very much attracted to gold and silver, and it is also a significant means of savings. Jewelers reported a rise in daily demand, with some even cancelling craftsmen leave to meet the increased demand. Now, we all know that when we buy gold, there is a 3% GST applied. So earlier, the total tax on jewelry was 18%, including 15% of custom duty and 3% of GST. Now this has been reduced to 9%, including 3% of GST and 6% of custom duty. Now this is the reason why there is so much of demand by the consumer for the gold in the market. We know that India is the second largest consumer of gold after China. Well, according to the World Gold Council, in 2023, India purchased 576 tons of jewelry and 185 tons in the form of bars and coins. So this reduction in custom duty is very timely, especially as the festive season is about to start, leading up to Diwali when people buy a lot of gold and silver. The demand for gold and silver is expected to increase significantly during the festivity season, providing relief to consumers. However, for the companies, especially those who have already imported gold and paid higher duties, this is a loss in a very short term. But in the long term, the increased demand will lead to higher turnover and profits. This is why, as soon as our Finance Minister Nirmala Sitharaman announced this news, the stock price of the jeweler companies like Tanishq, Kalyan Jewellers and Titan increased by 6 to 5%. Well, despite the increased consumer demand, we still saw the sharp drop in price resulted in significant wealth erosion in the market. It was reported that around rupees 10.7 lakh crore in value was wiped out in a single day, making one of the largest wealth erosion in Indian market history. This volatility was reminiscent of fluctuation typically seen in equity markets, highlighting the substantial impact of the custom duty cut on gold and silver prices. The dip in the price was not solely influenced by domestic factors. Internationally, gold prices also fell as investors took profits ahead of anticipated US economic data, which could indicate when the Federal Reserve might cut interest rate. This global trend added to downward pressure on gold and silver prices. Furthermore, economic concern in China and the potential for rate cuts by the US Federal Reserve also contributed in fluctuating prices. Now, if we look on year-over-year comparison, over the past few years, the price of gold and silver has seen significant fluctuation. In July 2023, the gold prices reached as high as of 74,700 per 10 grams. By July 2024, prices had fallen around 67,700 per 10 grams. Silver prices showed a similar trend, with significant decrease observed after budget announcement. The year-over-year comparison indicates a volatile market influenced by various economic and geopolitical factors. Well, the future outlook for gold and silver price remains uncertain. While the reduction in custom duty is expected to boost consumer spending and demand, broader market conditions and geopolitical tensions will continue to influence the price of gold and silver. Analysts suggest that potential Federal Reserve rate cut, US election, and economic concern in major markets like China will play a crucial role in shaping the future trends of gold and silver prices. Well, in conclusion, it would be right to say that the dip in gold and silver prices following the 2024 Union Budget was primarily driven by the reduction in custom duty, which led to lower import cost and increased consumer demand. However, this immediate benefit for consumer came at a cost of significant market volatility and wealth erosion. The future of gold and silver prices will depend on combination of domestic policies and global economic trends. As consumer and investor navigate this volatile market, they must consider both short-term benefits and long-term implications. Well, that's all in today's video. Hope you like this video. Do share it with your friends and family. Do subscribe to our channel Freedom Money English and download the Freedom app. And don't forget to check out the courses link in my bio. We'll see you in the next video. Till then, take care. Bye-bye.